And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott Wave update for the NASDAQ 100 for Monday, May 17th, 2021. I've made some changes to our larger count. And by that, what I have done, and I'm just going to switch out to the daily very quickly, is that I have moved the completion point of intermediate wave 3, which originally was put here, and I've put it over here. And I had suggested, we had been talking that that's what could take place, and that is what is going to end up taking place. So basically, I shifted over the 3 from there to there, the 4 remains in the same place, and the 5 is over here in the same place, but just the degree changed. So what we are now in is an intermediate degree 4th wave correction. So back down to that hourly chart. And what we have accomplished thus far, I've also changed the order in which I was labeling it. Here I said this is 1 or A, I said this is 2 or B, and I had put that this is 3 or C down here. Well, I'm changing. And now I'm saying this is A or 1, minor A or minor 1, minor B or minor 2, minor C or minor 3. And currently, I'm leaning towards that it's an ABC versus going to turn into a 5-wave decline. And if that is the case, then if it's an ABC for wave A, then it is likely going to produce a B wave. So switching from an alternate to the preferred then leaves that 5-wave structure as now our alternate, because that's the next best count that we can provide right here. So if this indeed is wave C and we have an A, then this could be A, B, C, and that could be wave B. Or it can be A, B, C of A of B. This could be B of B, and we're in C of B, this being A, this being a B. That's what it'd be labeled. The larger would be a B. And then expectation would be for a C wave decline. C waves are always 5-wave structures. So it will turn into something that looks like that. And we can run, when we run our Fibonacci retracement levels for that larger 4th wave decline, we can really hone in on these levels as to being the more likely zone. So we got a 400-point zone approximately right here. So say 4 to 450-point zone, where the wave C, the declining wave C, to complete the intermediate wave 4 will be down here. And there would be potential for it to come into this zone. Now, if we were to change around our Fibonacci numbers, but right now I'm going with that this is A, this is B, this is C of wave A, this completed wave B of B, and now I'm in a wave C of B, and that C wave is going to be 5-wave advance. So what is the most common then relationships between wave C and wave A? Well, the first is that they are equal in length, and that comes in right here, 13,716.25. And that fits. That fits very cleanly. It's a nice B wave bounce. Next up would be the 1.236, 1.382, with the topper up here at 1.618, and that takes us right below those highs. So off the bat, not expecting it. Is it capable? Yes, very much so. They can go all the way up here, and we can then put it into that it's an irregular B wave, and that says that it went on, created a new high, or put in a new low below the A wave, or above the A wave in this case. So that is, it can happen. It happened in the Dow in 2009. And it went to a new high and the other markets didn't. Anyway, this one could and then still come down in the C wave. But right now, I'm not looking for that. I'm looking for this to be first up. I think that one thing it can do, it can go 0.618. That wave C would be equal to 1.618 of wave A at 13,510. So those are our zones, 13,510, all of this all the way up, to be honest with you. And you can go 382, which is 13,922. So any of these can complete the C wave, and then we get an additional 5-wave decline down before we will say that this larger intermediate fourth wave is complete. And that's where I'm going to leave it. We have upside, we have downside. If the market turns and starts to head lower, then we also can go with that this is ABC and that's the B wave. Now, if that's the case, I am just going to remove that extension and say yes. And if that's the case, now our extensions are going to come from up here, because now wave C is going to be against this A wave. So we run it from there to there to there. Okay. Now you're going to see some matchups. So if this completes wave B and we start to turn lower in a C wave, that's the first area. Remember, C can be 0.618 the length of wave A. That comes in right there, 12,748.95. Well, that's the top of the zone that we had at 0.382. But now we've got another zone below, 12,644, 12,550, and then we've got another small cluster at the 100% level, which is 12,343 down to 12,307. So basically our zone goes from 12,340, our larger clustered zone, 12,340, likely down to, I would say, 12,098, 12,298-ish, somewhere in there. We're going to give it so that it can sink a little bit lower, because too much lower, we're really dropping drastic. Can it? Yeah. Am I going to expect that? Because that would be the next zone down there. If this does not hold, that's the next zone. And it still could be a fourth wave, honestly. And then it just jacks and it goes to the moon. This would be like a not quite 3,000 points, but a bit 3,000 points off that high. Not quite, 2,000 something. But we're going to look for this first, if it's a C wave. So if the C wave kicks in, otherwise, there's going to start heading for this hourly 50. Break is above there, then we know it's the other count that we just went over. This is the wave A, this is wave B, and we're looking for C wave up. If it comes down, starts to drop, and continues to drop, then we've got this. But this was wave B, and now we're dropping into wave C, and we've got some nice zones already put together just by combining the two Fibonacci's. So we've got some good stuff. And I'm going to leave it right there. And the next lecture will be on Tuesday, May 18th.